If you had bought the greatest of the big tech companies is Google. Google is up 41%, Apple is up 39%, Microsoft's up 22%. You might have won. Those were all better investments than the S&P. Much better than NASDAQ, much better than gold. Not as good as Bitcoin, not as good as MicroStrategy. But if you bought Amazon, you're down 18%. That was overvalued in the summer of 2020. Like, a bunch of 20-somethings were just buying Amazon because they thought, well, we're all ordering Amazon stuff, so it must be good. Well, when you buy something that everybody else understands to be good at the same time they all agree with you, it's normally bad.
Yeah.
Facebook is down 41% since then. Netflix is down 54% since then. So half the big tech got shellacked. The other half did pretty good. And now, last point, what if you bought enterprise software? We compete against companies 100 times as big as us. Oracle, SAP, Microsoft. Oracle is up 39%, IBM's up 6%, Salesforce is down nearly 20%, SAP is down 45%. So, summary for us, MicroStrategy's strategy was buy as much Bitcoin as you can and buy it with equity and debt.
So you heard that Michael Saylor believes in buying Bitcoin to weather the market's downturn, and that he believes Bitcoin is the only crypto asset that helped MicroStrategy outperform its competitors. Let's ask him more about his outlook on crypto as a whole and how he sees Bitcoin's progress going forward. But before we begin, it's important to note that none of this is financial advice. It is merely for entertainment purposes only. Now, before asking Saylor any further questions, let's see what's happening in the market. The most current information is that selling pressure has developed in the Bitcoin market after the price just reached the psychological level of $20,000, leading the price to fall below $18,800 on September 27th. Additionally, trading activity reached a 3-month high. Further, according to market analyst Michael van der Pop, Bitcoin should maintain a range between $18,600 and $18,800 to prevent further decline. The Bitcoin 90-day coin days destroyed measure, on the other hand, has reached a record low, and this is what it says about investors in the Bitcoin market. The supply of old Bitcoins is dormant more than it has ever been, according to Glassnode's most recent weekly report. The amount that one Bitcoin has accumulated after remaining stationary for a single day is known as a coin day. Therefore, the number of coin days on the network represents the total number of days that all coins on the network have been stationary, or, put another way, how idle the Bitcoin circulating supply has been. Any of these coins which accrued coin days that move automatically have their coin days reset to 0 and are referred to as having been destroyed. The number of coin days that are destroyed in this manner each day throughout the entire Bitcoin network is measured by the Coin Days Destroyed or CDD indicator. Spikes in the CDD may indicate that these older, who amass the most coin days in the market, have been spending their coins. The 90-day version of the indicator, according to the paper, can assist us to identify periods of increased and decreased selling pressure from these holders. This suggests that excessive holding at levels not seen during any of the prior cycles has been the most recent investor activity in the Bitcoin market. Now hear from Michael Saylor why he believes that Bitcoin is the only solution to having your money safe. Why only Bitcoin?
Technologies or ideologies that reinforce individual sovereignty and freedom, and they're rational. So hence Bitcoin. Right? Like if you have a bunch of money and you have a choice, are you going to buy $1 million of gold and put it in a bank of a centralized institution that will seize it? Are you going to buy $1 million of land in the middle of Beijing where the government of China could just take it from you? Are you going to buy $1 million worth of a stock in a Chinese company? How about an American company? How about an Argentinian company? Or are you going to buy $1 million worth of a crypto asset that's in cyberspace beyond the reach of a government or a corporation? And so clearly the answer is, if you take all of your money and all of your power and you put it in the middle of Beijing, right? They own you. And what if your life is not consistent with the policies of that government, then you lose everything. If you took all your money and you invested it in New York City, the mayor of New York could just take it. And if New York, if you took all your money and you put it in New Zealand and New Zealand locked down the economy for a year, right, then they own you. So if you're looking for sovereignty and freedom or a rational path forward where you get a choice, then you need to actually put your property beyond the reach of a government that might be irrational or that might be capricious. And you need to put it beyond the reach of a corporation that might be influenced by said government.
So you've heard Michael Saylor say that he believes keeping your money safe and out of the hands of the government is what everyone should do. Right now, he says, Bitcoin is the only solution to the problem. In addition to this, on the flip side, data from Glassnode reveals that the amount of Bitcoin held by short-term investors has been declining for 431 days. Glassnode's most recent weekly analysis indicates that each cycle, the STH supply and profit, typically passes through 3 phases. The total amount of Bitcoin that is now being held on the network at a profit is represented by the supply in profit indication. The statistic works by determining the most recent price at which each coin on the chain was traded. If the price of any coin was less than the current value of Bitcoin, then the currency currently has some unrealized gains. Finally, a well-known conservative crypto analyst made a bullish prediction regarding the price of Bitcoin when discussing the future of Bitcoin and other cryptocurrencies. A YouTuber claims that as the digital asset continues to spread, Bitcoin will steadily increase until it reaches $1 million. Invest Answers indicated that Bitcoin is getting close to declining returns in a YouTube video. When an asset reaches a point where increased future investments produce lower profits, it is said to have a declining return. The crypto analyst claimed that every new market cycle, compared to the previous one, Bitcoin delivers investors 5 times less return. Despite the apparent declining return of the digital asset, the analysts provided a different perspective on Bitcoin. They referenced Metcalfe's law, which states that networks gain value as their membership grows. Applying Metcalfe's law suggests an optimistic case scenario for Bitcoin if it follows the pattern of disruptive networks like smartphones and the internet. Accordingly, a conservative estimate of Bitcoin's future value has it at over $1 million by the year 2030. What do you guys think about all this? Do you agree with Saylor's view on Bitcoin and on the market? How high do you think Bitcoin will reach by 2030? Please share your thoughts below in the comment section. They always generate interesting dialogue. If you found this video interesting or helpful, don't forget to like and subscribe to our channel, and hit that bell icon so you don't miss any of our future uploads. And while you're still here, click to watch one of these 2 videos appearing on your screen right now. Each one is a value-packed dive into some of the hottest topics in crypto. Thanks for watching, until next time.